This is the FlipNerd.com Expert Real Estate Investing Show, the show for real estate investors, whether you're a veteran or brand new. I'm your host, Mike Hambright, and each week I bring you a new expert guest that will share their knowledge and lessons with you. If you're excited about real estate investing, believe in personal responsibility, and taking control of your life and financial destiny, you're in the right place. This is episode number 407, and my guest today is Steve Carlson. Steve is a good friend of mine and a fellow Texan. He operates out of San Antonio, Texas. Today we talk about how to build your business to stand the test of time. To be a successful real estate investor, to run a successful business, and to build a business where you're not doing everything yourself, you need three key things. A team with the right people and the right culture, people that have your values, right? A balanced business model with multiple exit strategies so you can balance today cash with long-term wealth and cash flow, and access to capital to fund your business to allow you to keep rental properties if you choose to, or fix and flip houses that allows you to not have to make decisions because you don't have access to capital. Really, really important. We're going to talk about those things and a lot more today. Steve has been an investor for 20 years. Through up and down markets, through thick and thin, through different teams, and lots of other things going on. He really shares a wealth of knowledge with us today and with you. If you're new, you're going to love today's show. It's going to help you get started on the right foot. If you've been around for a while, today's show may help you fill any gaps you have in your real estate investing business and recognize maybe some bad habits you've picked up, because we all do it over time. It's going to be a great show. Please help me welcome Steve Carlson to the show. Hey, Steve, welcome to the show.
Hey, thanks, Mike. Appreciate you having me on.
Yeah, I'm glad you're here, and we haven't talked for a little while. We've talked a little bit here lately, but it's been a while. I know you were on the show before. I actually don't have it up, but it's been probably a year and a half or so. I think.
Yeah, that was a great show.
Yeah.
It was wonderful.
I'm always truthfully, I think maybe folks that listen to the show don't always know this now, but more than anything, I've met so many people. This is episode number 407, so we've done a lot of shows, obviously. And, I really just enjoy having people that I've had on before, people that I've built relationships with or gotten to know. And, we could probably have 10 different shows and talk about 10 different topics. And so, but anyway, I'm glad you're here. You have a little bit of a different angle than some of the folks that are on. And, but before we get kind of started here, why don't you tell everybody like a little bit more about you and who you are for those that don't know you?
Sure. I'm Steve Carlson from San Antonio, and I've been involved in real estate for going on 20 years now, Mike. A long time. Full time since 2009, but I bought a lot of deals when I was part time. So I understand the part time, having a full time job and doing real estate on the side. Been there, done that, and it's tough. It's heavy, and the greatest thing I ever did in my financial life was quit that job and go.
Yeah. We're going to get into your business model today, and we're going to talk about like how to get your business set up right. And I know as real estate investors, we're so dependent on people on our teams, and people change and people flake out and people leave and come and go. And so that's an ongoing challenge. Like even when you've got the code cracked, it just takes one person on your team leaving to shift the dynamic of your business. But I know we're going to get into that, but maybe you could share a little bit, a couple tips there that you just said there on that transition from part-time to full-time, because a lot of people, I think, struggle with that. They want to go in full-time, they want to leave their job, but they need that bridge, Maybe share your thoughts there.
Yeah, it is a complicated thing for most people. It's very difficult to leave that comfort of the job. And what made it work for me is when I figured out and I knew that all I had to do was turn up that marketing knob to get the phone call ringing, and I was free because I had the knowledge. Being an engineer, I had to have the knowledge, and I had the experience. I knew I could just turn up that marketing knob and get the phone to ring. Yeah. And once I had that confidence and a support of my wife, then it was no stopping me kind of thing. So It was a rough time to quit. It was 2009, middle of that recession, right? So It was really scary. The first 6 months, I did one deal.
Oh, wow.
And so that was really scary. I was glad to have that parachute from my previous job and the support of an awesome wife. But funny, in the seventh month, we closed 7 deals. So it was
Oh, in the seventh month, you did 6 more deals.
yes.
Yeah.
Oh, we did 6 more.
Yeah, a lot of people. So I started in 2008, and I tell people all the time, like I didn't know it. We were naive when we got in. We didn't know where we were at. We didn't think about market cycles. We just thought about we don't want to go back to corporate America,
Yeah.
And
Yeah.
but truthfully, man, you'd love to have 2009 to 2012 back now, right?
Oh, big time. Big time. How
It's
things
coming.
would
I
be
don't know when, but it'll be here again. Yeah. So it
We
was a good
loaded
time.
up. That was a great time. We loaded up, and my net worth increased exponentially every year
Yeah.
for like 5 years in a row.
Yep, yep. Well, I know one of the things we're going to talk about today. We're really going to talk about just kind of how to structure your business for the long haul. And there's a few legs to this stool. There's having the financing in place, having the right team and people in place, and kind of having the right business plan, like what you do with exit strategies. And so let's kind of start by talking about people, because I know your team has changed over the past year. My team has changed a lot. People, the problem when you're in a small business is your team is often always in flux, right? You usually don't. It's not like you have. It's not like you're a large company where you got 40 people and maybe 10% changes. It's like no, you've got 3 people or 4 people, and 2 people changing in a year is like 50% turnover, right? So,
Right.
but talk about the importance, because we've had a little bit of conversation offline. Just the importance of for truthfully, your kind of mental well-being, right, as well as your business, to just have the right people in place.
Listen, we get into business for a lifestyle, right?
Yeah.
To have the so if you're a one man show doing all the work, then it can get too busy and overwhelming.
Right.
So when I started hiring people, my first person was administrative assistant. Brought her into the house, and she was awesome. Did phenomenal things for me for a lot of years, and we grew really well. Had a healthy dynamic there, and things went really well. Then we were doing so many deals, and having so much effort of my time, because she was admin, right? She was office. I'd get a contract. She'd handle a whole lot of stuff.
Right.
But I was still calling sellers. I was still managing projects. And so my second significant hire, was the guy that changed my life, was my project manager. I don't get a thrill out of going to rehabs every other week or every other day. I'm sorry. I don't even get a thrill out of every other week. I don't get a thrill out of them at all. I like to go when they're finished.
Right.
Love the metamorphosis, but going and working with contractors is like pulling teeth. So project manager was a key hire for me. He changed my life amazingly.
Yep.
And then we hired acquisitions person and another administrative person, and of course they're moving in and out, and it is a struggle dealing with people.
Yeah.
Especially, I really admire those guys that are great at it. There's a few guys that I could mention that are just phenomenal culture builders and team builders.
Right.
And I wish I could model myself more after that, and I'm trying to. We're working on it really hard. This is one of my key things to implement this year, is to be a better leader.
Yeah. Yeah.
Because that's really what it's all about. It's not about managing people. It's about being a leader.
Yeah, for sure. For sure. If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more.
Builders and team builders.
Right.
And I wish I could model myself more after that, and I'm trying to. We're working on it really hard. This is one of my key things to implement this year is to be a better leader.
Yeah, yeah.
Because that's really what it's all about. It's not about managing people. It's about being a leader.
Yeah, for sure, for sure. So let's talk a little bit about that project manager role. So that kind of implies you were obviously doing some rehabs and spent a lot of time doing that. So what do you think the right, people need to, there's a lot of ways you could do that, right? If you're not doing a lot of volume, it would be a part-time person that's doing one-off, and maybe they're doing something else for you, or maybe they have a full-time job and they check on things. But, we've talked a lot on this show about coordinator, office manager, administrative type role. And certainly we talk a lot about acquisitions, the importance of an acquisitions manager. Mm-hmm. And so the project manager we haven't talked a ton about before. So just to kind of share a little bit on that, what point does it make sense to bring that person in? Because you got to balance, hey, I don't want to have to deal with that anymore, with can I keep somebody busy enough, right?
Absolutely. Yeah. And my guy was very, very fortunate because he has his own rental portfolio, and him and his dad flip houses too.
Okay.
And so he had other income, which is really key, I think.
Yeah, that's good.
Because I couldn't keep him full-time busy doing 20, 25 deals a year.
Right.
Today, he's full-time busy. As a matter of fact, he's overloaded today. But when I think it became overwhelming to me when we had about 20 deals a year that we were acquiring and rehabbing. That's when I couldn't handle it anymore and effectively do anything else in the business.
Right.
Now, if you can find the guy that doesn't need a significant income, then bringing them on at 15, if you're doing 15 or maybe 2 or 3 projects at a time, it's a good time. So
yeah,
and having him manage rental issues is a big thing too. So I no longer receive tenant calls. They go to our bookkeeper and then to Kevin. So that's a major lift off of my back too.
Yeah. Let's talk a little bit more about the culture stuff, because I struggle with the same thing. We have, we have Flip Nerd and my house flipping business, rentals, a whole bunch of things are a little more complicated than they used to be. Across the whole thing, I think we have about 14 people, but literally there's 4 or 5 that work in my office. All the rest are all over the country or all over the world, virtual folks. So I struggle with that too, the culture stuff. And truthfully, I don't even really like to come to the office most days. Like I like to just go to Starbucks and work or somewhere because I can just kind of put the blinders on and focus on something. But it's hard to build culture in a small business. There are times when my office just has one person in it because somebody's working from home that day. I'm on vacation, a couple things going on like that, where it's just like one person or 2 people. It's hard to have. It's not like we're Google over here where there's like a ton of people going on and there's foosball tables all over or whatever they do there. Like it's a little bit harder to do that. So let's talk about kind of culture in a small business and maybe some of the lessons you've learned.
Yeah. It is. We are in a small office, right? So we're all, and I'm just like you, Mike. I don't want to go to the office if I don't have to, but I have to. So I'm there. And when I'm there, I try to create a light, airy attitude, environment. The thing probably that is biggest about culture is it's not something that you can really create, right? You have to hire the people that fit your culture. And so when we're hiring and interviewing and advertising, we advertise our values. This is our values. This is what we live by. And this is the people that we are. If you don't fit these values, and if you're not a person like me that values integrity more than anything else, then, well, probably second on the list, but you're not going to fit. It's not going to work for you here. So you won't be. And so the latest hires we've had were great Christian folks that fit our culture and our environment and want to grow with us. They're not necessarily entrepreneur types that want to create their own business because conflict, right?
Yeah.
There are people that want to be individual contributors and help and see our vision and can get involved in the excitement around our vision and growing to the point of where flipping 500 deals a year or whatever the number is, right?
Yeah, yeah.
So they get excited about that. I think that's the basic background of where it comes from, because you can't really manufacture. I am blessed with a wife that has a great personality that people just love to be around. So she's a lot of fun. And so people like coming to our office to hang out with Tamara. She's such a fun
Not
person.
necessarily you, right?
No, not me at all. I am so blessed to have her there.
Yeah, that's awesome. That's awesome. So let's kind of jump into the right exit strategy. So a lot of people, a lot of new people tend to focus on wholesaling or assigning properties, and there's nothing wrong with that. But I think we probably know. I think you and I probably agree that long term, you're probably leaving money on the table if that's all you're doing. And of course, if you're not keeping some houses as rentals or doing some seller financing like you do, then you don't have any additional income streams coming in at all. You can never get off that treadmill. But without kind of being critical of other people's models, let's share a little bit about your model and kind of your beliefs and a balanced mix of exit strategies, if you will.
Sure. I started out just flipping houses. That's all. I didn't understand wholesaling 20 years ago. There wasn't anybody to wholesale to in my little bitty town other than my friendly competitor.
Yeah.
And so wholesaling wasn't a thing. So we fixed and flipped. And after 2 or 3 years doing that with a full-time job, I realized this is just another job. Yeah. And that's the same thing with wholesaling today. It can be a very high-paying job.
Yeah.
It's a job. You quit doing it, the income stops. So then we started buying rental properties. I've heard, rental properties is the way to go for cash flow, right? So we started loading up on rental properties, buying a bunch of rentals, and it didn't have the capital to buy them with cash, so they're all leveraged. Mm-hmm. And so I learned really quickly, over 2 or 3 years, that my rental portfolio, doesn't mean yours wouldn't, but my rental portfolio didn't cash flow a lot. So I figured, okay, these things, when the debt is paid off, I'm looking at the $500 a month that's going to be added on top of that income, and that's where that's going to set me free. So leveraged real estate is a long play. That's the end game.
Right. Yep.
Now, to get the cash flow today, the game is to take those little bitty houses, those little $20,000, $30,000 houses, and sell them for $40,000 to $60,000 on payments. So you're getting a arbitrage. If you're financing them, you're buying them at 8 or 10% interest loans, right? And then we're selling them with 11% notes, and so we're getting a little bit of arbitrage on the interest rate, but a huge arbitrage, I guess, maybe that's the wrong word, on the spread.
Sure.
So
yeah,
there's no repairs, there's no issues with maintenance, and so those things cash flow like crazy. They are just amazing cash flow machines for us.
Yeah, that's awesome.
Love those. So we got the cash flow from the notes. We have the long-term cash later from the rentals, and we got cash now needs to go buy the motorhome or whatever toys we want to buy. Flips.
Yep. Well, how do you break that down, Steve? How do you decide on those three things?
A lot of it has to do with financing of it, and more than anything, though, is the price point. If it's an $80,000 house, in San Antonio, it's just not a neighborhood where I want to go collect rents.
Yeah.
So I can't. I have a hard time relating to that socioeconomic level. All right, I can't quite get there. And so those are great for owner finances. There are great people in that socioeconomic level that have nice sized down payments that will pay, and they have pride of ownership. And those are the people we're looking for to buy.
Sure.
So
and at that price point too, 80 or below there, it's not as interesting to you to make 10 or 15 by doing a fix and flip because the value of the property is so low. You'd rather make a lot more money over the long term.
Absolutely. It's a massive difference. For those little houses, we buy them for 20 and sell them for 25 or 30 to collect a wholesale fee, if you will.
Yeah.
Or we can owner finance them and make $100,000 over 15 to 20 years. So
right.
It's the quick nickel versus the slow quarter thing, and
right.
There's a lot of quarters actually when you add them up.
Yeah, absolutely. And then the rental stuff is kind of in between, right? Like not low enough for you to want to keep it as a seller finance deal. Truthfully, when you start to model out as the value of houses go up, it's harder to seller finance because you're trying to keep the payment amount equivalent to what rent would be, right? Close to that. And if that's why not a lot of folks are seller financing $200,000 houses, because the payment's so much higher than what rent would be or what their mortgage would be if they bought it the traditional route, if they could.
That's right. And people in the $200,000 range can easily get financing. So
right.
So anything above 120, you got buyers that qualify for loans, and you got banks that are willing to lend money. So those things we're flipping.
Right.
So between the 120 and the 80, it's really the sweet spot for margins, for rental margins.
Yeah.
But it's also it's a high demand rental price point. So a $100,000 house is going to rent for $1,100, $1,200 a month. That's a really good margin.
Sure. Yep. Okay.
And they're good people. I mean, just regular Joes, regular people like us. So.
Yep. Are you saying you're regular?
I am very, very regular.
So let's talk a little bit about capital. And I know that capital has, in many ways, kind of sets you free. I have some private money that I do my fix and flips with, and even some long-term hold stuff. So that has really helped a lot. I mean, I think probably some of it is, and I don't know exactly when you got started with private money, but when I came in 2008, 2009, I found out pretty quickly a lot of the banks had gone away. A lot of the lenders were gone. I mean, everybody and their brother's a lender today, right? I mean,
yeah.
I don't know if you use LinkedIn at all. I'm just sick of LinkedIn, but I have a huge. I've got 5, 6, 7,000 connections, but I literally get like 20 new connection requests a day, and I think 18 of the 20 are lenders. They're like, "Oh, I'm a private lender," and as soon as I accept it, I start getting emails like, "Hey, would you be interested?" And we're lending, between $10,000 and $500,000 at 4%. We're like, "What is going on here?" But anyway, lenders were gone during 8, 9, 10, really, the traditional lenders, right? Or they certainly dried up. Mm-hmm. Is that what forced you into looking for private money, or?
No. Remember, Mike, I've been doing this since 1998. And
right.
Back then I used plenty of hard money.
Right.
And I just got tired of paying the 16% rates. And then I had this magic connection. I got a seller called me, said, "Hey, I've got this house. I'm about to lose it to foreclosure." And I got, go through my lead sheet and asking him all the information, and finally find out who his lender is. And it's a local guy. It's a local businessman. So he bought the house owner finance. And I was learning about Subject 2 at this time. And it was probably 2000, 2002, somewhere in there. And I said, well, let me call up Mr. Carter and see if he will let me assume that loan. And sure enough, he just wanted me to make up the back payments and pay up, get the taxes paid up, and he let me assume that loan. Yeah. So I got to be friends with Mr. Carter. And one day he told me, he said, my accountant said I should probably start lending some money. I'm like, perfect. Excellent. So he became my first private lender back in 2000. And then I would just meet people because his rates were 9%, right, as opposed to 16%. Sure. And it wasn't a rate he dictated. He said, "What do you want for this one?" I'm like, 9. Okay. So we did plenty of deals at 9%.
Yep.
And so and then I would just meet people at events or at wherever I was, and just started talking to regular Joes like you and I, regular people, not institutional people that call themselves private lenders.
Right.
These are just neighbors and friends about putting idle cash or retirement funds to work.
Yep.
And so we, over the years, raised, millions of dollars in very, very, very private money.
Yeah.
And it was an absolute game changer for us. Now, when I need money, I call up Mr. Carter. I said, "Hey, Mr. Carter, we got this house. We're buying it for 80. We need 100 on it. It's worth 150. Are you interested?" "Yep. Send me the details." So I'll send him the details, and 2 days later we got.
And you're still using that same guy from the beginning?
Yeah.
That's
right.
Awesome.
We got about 14 more now. So.
Yeah. Yeah, and talk about, so we, there's a bank right down the road here. I won't say the name of the bank. It's like more of a regional bank, I guess. And they have a big board outside, and it's like, they have CD. The APR is like, I think they're saying for a 10-year it's like 1.2% or something. I was like,
Right.
that's ridiculous. But that's
You
who
know,
you're going after, right? Is the people that really don't have a lot of other alternatives. They kind of don't trust the stock market anymore. They're tired of it, and they want a chance to make more money than what they can typically make in something that they see that somebody they trust and in their community, right?
that's precisely correct. Every one of my lenders, I think, when I first met them, was over 50 years old.
Yeah.
So they had some cash reserves set up. They didn't. One guy liquidated CDs to put to work with me. I think he liquidated another one about 2 weeks ago because his money was late to getting into the account. He had to liquidate a CD, pay the penalties, and put it to work with me at 8.5%.
Right.
And it's a beautiful thing, and we treat them all obviously very well. They always get their money. They always get well communicated with, and we treat them right. And because we treat them right, they always come back.
So talk a little bit about that treating them right and the importance of, probably different people. Of course, you need to set the expectations of what's going to happen, right? But talk a little bit about that balance of setting the expectations and what the typical expectation is from a local private lender, people that you've worked with.
So I sit down with them and go through a presentation. I've got a 30-page PowerPoint presentation that I sit down and go through that with them, and I show them this is our business model. This is why we can pay such high rates. Because honestly, older people, I'm not saying 50-year-olds, because I'm 50.
That's young. Yeah, that's young.
60, 70-year-old folks, they a high interest rate loan is a risky loan. So anyway, we explained why we can pay the rates because we're buying at such wholesale prices. And we explain the whole process. We collect all the money up front to be used on the rehab. You're protected at 70. No, we will never borrow more than 70% of the value of the house. Never. And you have insurance. You've got the first lien, mortgagee insurance, title insurance. So all that same protections that they have from a bank, they get with us.
Right.
And so that's presented early on at our first meeting when we're talking about the program.
Right.
So, and it's not usually a negotiable thing. So I don't.
You just tell them, you don't say what do you want. You say here's what I offer.
This is our program. Yeah.
Yeah. And then it probably helps to show some examples, right? Like here's a recent deal we did. Like people like to see that kind of case study, right? Yeah.
Case studies are big. Every time I get to the case study part on my presentation, people start pointing and getting really interested.
Right.
And that's the meat and potatoes behind any presentation. Really, is case studies, I think.
Right. Yeah, a lot of times. So I did a similar thing early on with a couple of banks that we work with now, many years ago, and now I haven't had to do that in a long time because we've got access to the capital we need. But they were always like, how did you buy it for that? Like they don't really understand because they're thinking more of a traditional lender or a traditional buyer and seller, right? But just over and over again, how'd you get it for that? That's our model. That's our model. And then once they understand it, then it's kind of like it provides a lot of security for them, right? That's in their mind.
It does. Yeah. And in my case study, I explained how we found that deal and why the seller sold it to us at such a crazy price or interesting terms.
Right. Awesome. So we've talked about having the right people, having the right exit strategies, and when you're building your business for the long term, there is no one exit strategy that makes sense for every house that you could possibly call. I mean, I tell people all the time. I've had people that say, well, I do obviously a lot of coaching and mentoring. People are like, I want to keep them all as rentals. I'm like, well, you unless you're independently wealthy, you probably can't do that. You have some operating expense, right? And you're not going to keep the $90,000 house that just came through and the $400,000 house that just came through. That $400,000 house isn't going to make a good rental, right?
Yeah. Right. I grew up in a small town. I grew up in my real estate business in a small town. So we had to make whatever came through work, right? If it was a $20,000 house, what are you going to do with that? No bank wants to finance that. People would buy
right.
$40,000 houses, don't have credit. So how are we gonna monetize this thing? And then the same thing with a $200,000 or $300,000 house. It makes no sense from a rental standpoint, but from a flip standpoint, it'll work all day long. And so those are the things that you just kind of got to engineer and engineer the deal based on what you have in hand. So I don't want to pass up opportunity. I'm an opportunist, I guess. Yep. That's a good word and bad word in some circles. And so you got to take advantage of what's given you. And if you're just marketing over for high equity deals, that's great. I mean, it works. But if you're just marketing for high equity deals, you're going to lose out on some creative financing opportunities from sellers, subject to, for example. And if your model is only wholesaling or only flipping, you're going to, what are you going to do with the cash? You got to roll it into something. And I don't believe into rolling it into the stock market. I don't believe in rolling into something you don't understand. We understand real estate. So let's take our real estate knowledge and grow it from this wholesaling little funnel to add some rental properties and then maybe doing some fix and flip or whatever else you might want to do. Yep. So keep growing that circle of knowledge and not creating new circles of knowledge over here, because that's just going to screw up your core. Yeah, trust me, I've tried. I tried flipping. I tried day trading. It didn't work, man.
Yeah. No, I truthfully, this has been a long time ago now, but I went to my undergrad is in finance, specifically in investments, because I wanted to work in investments. My wife was a investment banker on Wall Street, and we just got dismayed with Wall Street in New York, and it's like I don't really understand that stuff anymore. It's like it's more financial engineering, it seems, than something that you can believe in anymore. And so we believe in boxes with windows and doors. I can see it, I feel it, I understand it, right?
Yeah. Don't try to get sidetracked with that other stuff. Entrepreneurs have that problem with getting sidetracked with a different business model or something, and there's so much power in focus. Creating expertise in how to run rental properties, and then once you create that expertise, go flip some stuff so that you can rebuild your cash reserves. Yeah. And then so.
Good stuff. For those that are listening today, I think this is a treat, because a lot of folks that listen to the show, if you're newer, I think hopefully what we've conveyed here is the importance of building a business and not just being a one-man band or a one-woman band. And that's not why any of us get into this, although I think there's a lot of real estate investors that even if they get past that line of, hey, I can do this now and not have a job, they end up just trapped in their own job, kind of self-employed. So the team is important. And having multiple exit strategies, you're right. I mean, I've bought hundreds of houses. Now, in hindsight, I look back and say, I wish I'd kept more as rentals. Like, we all do that, right?
We do.
But knowing what we know now, after some massive appreciation over the last 5 years, of course we all wish that. Yeah. But I think the key is if you're wholesaling and fix and flipping everything, you're not building up any assets or anything that you can generate cash flow from.
High-paying job.
Yep.
And you got to have the multiple income strategies. I'm a huge believer in that.
Yeah. And then access to funding is something that all real estate investors need and want. And like you said, that hard money stuff gets expensive if you rely on that for the long term. Not that when you're getting started, that might be like Steve talked about talking to private investors, and not that it can't be done if you haven't done any deals yet, but it's easier when you can show that track record or here's some examples of what I've done.
Sure. Start off with some some hard money and build that as your basis of knowledge and proof that you pay your debts, and then show that to your neighbors and family. Yep.
And even with private money, you can continue to get rates on it. I've heard you talk before about you're offering 8 or 9%, and then you go to somebody and you say, hey, I've got another deal coming up, but I've got another lender that I'm going to use. And they're like, well, I'll do it for 6%. Or they'll start to maybe negotiate down because they're looking at you giving that money back and them having to do what with it, right? Put it back in a CD maybe. So they start to compete with each other a little bit. Not that you're trying to build relationships too. There's a balance there, right?
There is.
But in a time like this where you've got access to more money than you need, you can continue to get rates down a little bit too.
We can, yeah. And I lost some people when I went to 8%. I lost some 10% investors.
Yeah,
it's part of the thing. And I'm sorry because I like them, and we're still friends, but they just don't. They just want a 10% return. That's fine.
Yeah, awesome.
Buku's at 8 and 8.5. So,
right, yeah.
Business.
Well, Steve, if folks wanted to learn any more about you or reach out to you or anything like that, where should they go?
Well, I don't have anything to sell. I don't have any programs or anything, but I did create a little white paper on my business model that
Okay.
they can be very beneficial, and they can find it at SA Real Estate Deals, as in San Antonio Real Estate Deals .com. And at the bottom, I think we got a link to pick up that white paper.
Okay.
And I think just put your email address in there and it gets sent over to you. If not, reach out to me. It's Steve at solutionhousebuyers.com, and I'll forward it to you.
Awesome. We'll put a link down below for the website you gave out there. So,
Yeah.
cool, man. Good to see you.
Yeah, good talking with you again, Mike.
Yeah, thanks for sharing this knowledge. This is good stuff. Hopefully, people took a lot of notes today. There's some good nuggets in here. So,
It served me.
yeah. Hey, everybody, this was episode number 407 with my buddy Steve Carlson. Good information in here. If you hopefully you got some good information here to kind of apply in your business. So, we appreciate all you guys. If you have not yet, if you could subscribe to us on YouTube. Of course, we'd like it if you watch it on flipnerd.com. And give us a positive review and subscribe on iTunes, Stitcher Radio, Google Play, and any of the other million places you could get access to a podcast these days. We'd appreciate it. That kind of fuels us to keep going forward here. So appreciate you guys. See you on the next episode. If you're an active real estate investor already doing deals and looking to double or triple your business, you should consider joining the Investor Fuel Real Estate Investor Mastermind. We're a small group of investors that share our best practices, tips, and tricks with one another in an effort to all win. Real estate investing can be a lonely business for successful real estate investors, but it doesn't have to be. Investor Fuel members meet 4 times a year, but we talk to each other 365 days a year, and we focus on improving the profitability of our businesses, improving the quality of our lives. That's why we do this, right? And making an impact on those around us so we can truly leave a legacy. We limit our membership to only 1 to 2 members per market, so everyone shares their knowledge, tips, and tricks openly and honestly. Our members include some buying 1 to 2 houses a month, up to some of the most respected investors and leaders in the real estate investing industry, some of which have personally done over 1,000 deals. If you'd like to be considered for our invitation-only world-class mastermind, please visit investorfuel.com to request your personal invitation. Our next meeting is coming up quickly. Go to investorfuel.com now to learn more. Thanks for joining us for this episode of the FlipNerd.com Investing Show. If you're not yet an elite member of FlipNerd, you're missing out. We have tons of great training, including a new detailed masterclass published each month and live training webinars with experts twice a month. Plus, you'll get access to all of our archives, where we already have a growing library of masterclasses and other training videos. Elite members also get membership in our incredible online mastermind group, where many of the top real estate investors from across the country, including many of the hundreds of guests I've had on the show in the past, are already members. Whether you're brand new, looking to get started, or a veteran, you simply must join today. I promise you won't be disappointed. To learn more or join today, please visit flipnerd.com/lab. That's flipnerd.com/lab. See you on the next show.